So, you're over 60, you've worked hard, you've earned your retirement. The last thing you need is a surprise tax bill eating into your nest egg, right? Well, today we're going to break down 8 really powerful tax breaks designed specifically for seniors that can help you keep more of your hard-earned money.
Does this sound familiar? You've done all the planning for retirement, you think you're all set, and then tax season rolls around, and bam! The number you owe is way higher than you thought it would be. If that sounds familiar, trust me, you are not alone.
Yeah, this is a huge reality for so many people. Between Social Security, your 401k withdrawals, maybe some other investments, the whole tax picture can get really complicated and, frankly, pretty expensive once you stop working.
And look, the scale of this is just, wow. Nearly 17 million Americans over 65 are considered economically insecure. That means every single dollar you can save on taxes isn't just nice, it's absolutely critical. We can call this the retirement tax surprise. So many of us just assume, hey, I stopped working, my tax bill's going to plummet. But that's just not how it works a lot of the time. So let's talk about how we can flip that script.
Okay, let's start with the easy stuff, the low-hanging fruit. These are tax breaks you get just for getting older. Think of them like a birthday gift from the tax code.
All right, first up is a really big one. And honestly, a lot of people are still just learning about it. It's a huge bonus deduction that was created just for seniors under some recent tax law changes.
And the best part about this one, it is so simple. It's a flat $6,000 bonus deduction. And if you're a married couple and you both qualify, that's $12 grand. This is totally separate from your standard deduction. You don't have to track receipts or save any paperwork. It's just a straight-up boost, and it's on the books through 2028.
And hey, speaking of the standard deduction, here's another little bonus that catches a lot of folks by surprise. The minute you turn 65, that standard deduction amount, it automatically gets bigger, just like that.
So here's the deal. On top of the normal amount that every taxpayer gets, you get an extra boost. For 2025, that's an extra $2,000 if you're single. If you're married, you can each get an extra $1,600. So if you're both over 65, that's a $3,200 boost. Now, most tax software is pretty good about catching this, but it never ever hurts to double check.
Okay, so those were the automatic wins, the easy stuff. Now let's get a little more strategic. We're going to talk about some smart moves you can make with your income and your savings that can really truly make a huge dent in your tax bill.
Okay, let's tackle Social Security first, because boy, is there a big myth floating around. A lot of people think their Social Security benefits are just going to be taxed, plain and simple. But get this, in reality, about 60% of people who get Social Security pay zero federal income tax on it. The whole trick is figuring out if your income puts you into that other 40% who do have to pay. And it all boils down to this one number the IRS uses. They call it your combined income. So what is it? It's basically your adjusted gross income, your AGI, plus any non-taxable interest you might have, plus half of what you got from Social Security. If that grand total is under $25,000 for a single person or $32,000 for a married couple, your benefits are completely tax-free. So, you see, the secret is managing that number. All right, now this next one, if you have a traditional IRA and you like to give to charity, this is an absolute game changer. Seriously, it's called a Qualified Charitable Distribution, or a QCD. And what it does is let you get a major tax break for your donations even if you don't itemize. That's huge! And the process is actually super simple. First, you got to be at least 70 and a half years old. Then, you just tell the company that holds your IRA, hey, send this amount of money directly to this charity. For 2025, you can do this for up to $108,000. And here's the magic. That money never even shows up as taxable income for you. It's completely excluded. Which, by the way, also helps keep that combined income number low for your Social Security. It's like a 2-for-1 tax-saving punch.
Okay, here's a question I hear all the time, and it stumps a lot of retirees. Can you still put money into an IRA after you retire? And the answer is a big, resounding yes. Absolutely. As long as you have some kind of earned income, from a part-time job, maybe some consulting work, a little side business, you can keep on contributing. There's even a cool rule that lets a working spouse make contributions for a non-working spouse, so the saving doesn't have to stop.
All right, last section here. Let's cover a few powerful tax breaks that are designed for more specific situations, like if you're dealing with high medical bills or maybe just had a lower income year.
You know better than anyone that medical costs can be a massive expense in retirement. And a lot of people just write off the medical expense deduction. They think the amount you have to spend is way too high. But you might be a lot closer to clearing that bar than you realize.
So here's how it works. You get to deduct any medical expenses that are more than 7.5% of your adjusted gross income, or AGI. So let's say your AGI is $50,000. That means your threshold is $3,750. Now think about it. Once you add up all your costs, we're talking Medicare premiums, prescriptions, dental, vision, all of it, a lot of retirees discover they've blown past that number, and every single dollar you spend above that line is deductible as long as you itemize.
Okay, this next one might just be the IRS's best-kept secret. It's the credit for the elderly or disabled. And notice I said credit. That's way better than a deduction. A credit reduces your tax bill dollar for dollar. Now, I'll be honest, the income limits to qualify are pretty tight. But if you have a year where your income is lower for some reason, you should absolutely 100% check to see if you're eligible.
Looking for a simple way to help out your family financially? Most of us will never have to worry about the big federal estate tax. But what you can use is the annual gift tax exclusion. It's a way to give money to your loved ones right now, completely tax-free.
For 2025, the number is $19,000. You can give up to $19 grand to any single person you want, your kid, your grandkid, or friend, whoever, and you don't even have to file a gift tax return. And if you're married, you and your spouse can team up and give one person up to $38,000 in a single year, all tax-free.
So what's the big takeaway from all this? It's simple, really. You have way more control over your tax bill in retirement than you probably think. The whole secret is just being proactive and knowing what you're entitled to.
So today, we basically covered 3 kinds of tools in your tax-saving toolbox. First, you've got those automatic deductions that kick in just because of your age. Second, those smart strategic moves for managing your income from Social Security and your IRAs. And third, those special credits and deductions for specific situations like high medical costs.
And that really just leaves us with one final question for you. After hearing about all these breaks, how much money do you think you might be leaving on the table? Knowing this stuff is step 1, but the real question is, are you using it? A little bit of planning here could put a whole lot of money right back where it belongs, in your pocket.